Chairman Powell already said at the press conference last month that rate cuts were discussed at this meeting, but the minutes show those cuts are not imminent. The participants did view the policy rate as likely at or near its peak for this tightening cycle, and almost all participants indicated that their baseline projections imply a lower target range for Fed funds would be appropriate by the end of 2024. However, the minutes also say that, quote, participants noted it was possible that the economy would evolve in a manner that would make further increases in the target range appropriate. Going on to say that participants also, quote, reaffirmed it would be appropriate for policy to remain at a restrictive stance for some time until inflation was clearly moving down sustainably to the Fed's 2% target. Now, on the subject of inflation, the minutes do say all participants observed clear progress had been made in 2023 towards that 2% objective, though they would need to see more evidence that inflation pressures were abating sustainably. And they did note upside risks to inflation, although the minutes say those have diminished. Participants also generally perceived a, quote, high degree of uncertainty surrounding the economic outlook. As for the employment outlook, the FOMC assessed the labor market continued to come in to better balance, though several participants noted the risk that if labor demand were to weaken substantially further, it could transition quickly from a gradual easing to a more abrupt downshift in conditions. And a final note on financial conditions, the minutes do note the observation that there had been an easing in financial conditions since the summer, and say that many participants remarked an easing in financial conditions beyond what is appropriate could make it difficult for the committee to reach its inflation goal.